Okay, so my name is Dmitry Krylov, and here we are with trading conversations. And the main topic today is the price levels. I'm the main leading analyst of Binoma, so I have some kind of an experience in trading. So I'm trying to, share it with you with some part of that. So today, the price levels, the basics of any trading, uh, we have, I have, quite technical issues, but in spite of that, I suppose I'll be able to show you everything I want. Well, the main problem today is to determine what is the price levels, why do they still work. Price levels, any of them, a horizontal one or trend levels. So then I'll try to explain and make it easier for understanding these determinations like rebound, puncture, and breakdown. What is the difference between them? Exactly between puncture and breakdown, and when to make deals from levels. How to use them? I'll try to show you. I think I will show you how to construct levels with the right way. One of the right ways in for analyzing some kind of price movement. So because there is a lot of different ideas and opinions about that, how to construct the levels the right way. So by the highs, lows, by the main open or close part, the body of the candlesticks. Anyway, we'll determine how do I do that. I will show you, and how do these levels work then. So with the program, and we'll begin with the determination of the support and resistance levels. What is that? And in terms of sellers and buyers. So the main idea and the main question is how and why do these levels appear and support the price, or they resist the price movement when everyone knows about these levels. They were used since they have been used since I don't know, about 100 years. They were known in the beginning of the 20th century for sure, but I suppose that earlier more from the Chinese and Japanese trading, not platforms, but markets. So, but they still exist, they still work, the price still reflects, rebounds from these levels, and they work. Why? Because this we should understand that the price is just a reflection of everything we expect from okay, nice. I just see the comments, so sound is okay. That is great. Thank you very much. So we should understand that this just the price movement, it is just a reflection of what we are expecting from the markets, what are the buyers and sellers are expect from the markets. So every seller wants to sell it higher than it costs, and every buyer wants to buy it lower than it costs. So it's always the balance, and that balance is the price movement. And the founding of this balance is the price movement, and the made deal is the main deal is we see the price fixing some kind of points or pips moving and, well, drawing up when the deals are done, already done. But we are more interested in what will happen. So buyers and sellers, all of them have their own interest. All of them has their own ideas of what is the price of the asset. So who is winning? It depends. It changes every moment. And but everyone, sellers and buyers, they know the psychology, mass psychology. So it's not one or two buyers or three sellers. It's a great market with billions of dollars of capitalization. So a lot of people are involved in such trading. A lot of companies, they divided by capitals, they divided by money, but a lot of people is here. So no one can just move the price in one, well, so far, no one can now. It was possible 10, well, not 10, about 20, 30 years ago, before the, well, American regulation laws were invented, and before they have begun to work as they work now. But now the monopoly or some kind of things, they are not possible. So no one can, sorry for that. Oh, anyway, but no one can use it. No one can move the price alone. So everyone knows and understands that, well, everyone, the rest of the market, all the buyers, all the sellers, have to have some reference, have to have some points, well, not points, quite plateaus of the rest. When the price is resting, that kind of flat movement of the price of the market. So, and we can expect where it can be, not only by time but more by price, because everyone knows the full and loves, people love full numbers, like 1,200 or 1,000 or 500 or even 625, the well, whole number. So everyone who was trading before or who wants to enter the deal will be marked by these price levels. Everyone expects until these full digits will be passed, up or down, and then a lot of well, buyers or sellers, it depends on what are the expectations on this asset. They are just connect to the movement. They don't want to begin it, and they cannot do it by alone. They have risks, but when the price breaks through this level, this, for example, historical level, like for example, $1,000 per share, for example. Everyone who was waiting for this moment, everyone who was balancing on should I buy or should I sell, if we talking about breakdown, breakthrough, the upper breakthrough, 1,000 and more. So everyone who was waiting for that will enter now, and they will begin the trend. A lot of people are there. So all who was waiting enter the deals, and that begins the trend. But before that, everyone was waiting this passing of this well, whole scale full digit level. So, and this level, when the price goes up through this level up, yeah, then it returns and then it goes through it down, it will work still, because everyone remember the full digit 1000. Everyone will wait for passing by the price passing by this level. So that is the levels. It's not kind of axiomatic or something like that, but we just should understand that we don't move the market. We don't have such a capital. No one has. Well, someone has, but some corporations have, but they are not allowed to, by laws, they are not allowed to enter such great amounts to move the price alone. That's a monopoly, that's restricted. So, we should know and remember that levels just show us how the people think, how the masses think. And we, at the part of the market, we shouldn't go across the crowd. We should go with the crowd. We should understand how does it think, the crowd, the market crowd, if you want. So everyone wants to get the money. Everyone wants to get the interest. So, and that is quite the idea of all the markets. So when we see the level, when we see that the price can't go through up or down, so then we understand that this price is too low, too high, and the most part of the market thinks the same. They are waiting until someone will decide to buy by this price and more, or sell less than this price, and more, and less, I mean. So, and when it is passed, everyone enters the deal. So we are expecting that idea. That is quite a simple, a lot more simpler than it happens in the real market. This explanation, but this is the explanation of the main idea. That you should remember that levels and the price movement is not just some price someone moves. That is the real deals between some people or companies, but companies are the people again. Yeah, they're just a little bit richer, they have more responsibility, but they're still people. They have their interests, they have their emotions, and so on. So we should understand that these levels are just a pause between the balance point between the sellers and buyers, and everyone else is waiting until this balance point will be passed. So what are the support levels? The support levels are called all the levels that pass below the price. So below the now, accidental now positioning of the price. So if the price is here and we have some level, well, trend level with some angle, or flat level, horizontal line, and price is here. So if it is under the price, so it is support level, and it supports the price, and when the price goes down, it supports it and reflects. The price goes up then, mostly in the flat, I mean. But by the trend line, when we have the trend channel, the same happens. So, and the next idea is that the resistance levels, while they resist of price movement. So if the price is here and we have some kind of the level upper, is it angled or is it horizontal? It doesn't matter. The price, if the level is up of the price, upper of the price, so, and the price goes somewhere, it doesn't matter where it goes now, but the level is upper than the positioning of the price. So then this is the resistance level. Why? It resists of passing through, or passing the price through it. So it reflects down. So every level which is higher than the actual price is the resistance one. If each level what is the lower than the now positioning of the price, that is the support level. So it's just quite a simple thing, but sometimes people are confused about that. So this is the main idea. And what is the difference between trend and horizontal levels? Well, when we have the trend level, we have some corridor. We always have some corridor of price movement. For example, now I will try to show it to you. Wait a second, because I have no idea of moving. How does it happen? Well, I'll try to show you like my that's funny. I'll show you my platform. I hope it is okay to see. Well, I'll try to find it out. Well, that is quite okay, so you can see it. Oh, sorry. Okay, so what do we have here? Here we have the tools. We have lines, raise. I prefer raise. We have the horizontal lines, and let's check the horizontal. Well, any kind of. So if we have horizontal levels, so we put it here. Oh, sorry. It worked the different way now. So we put the level. We can see that this level is for now is the resistance level. It's upper than the now positioning of the price. So we can see that if we are talking about now, we have the level of support here by the minimums, the local minimums, what we see from the point of now, and now is here, yeah. So and we have the difference, the different levels between that, quite obvious here, one, and except the horizontal lines, except the horizontal levels, we can see the levels, for example, trend ones. And trend levels, I mark like the different color. And the trend level we have now here inside the flat corridor, like this one, yeah, between the lowest one and the middle line. We have the trend begin, and the trend line. Oh, sorry again, tools, array. And we can see that here is it. Here is the trend line, and this trend line is well, uprising, so it is the support level, and the horizontal line here is the support level too, so far, for now. Later, when it will be punctured, so it will become the resistance level, but so far it's support level. And the difference between the horizontal lines and the trend lines is the main idea that the trend line shows us the orientation of the price movement, the dynamics, so where it goes now. So we can see here, without these lines, without rays, without horizontal lines, we can see just candles, and we are not sure, we may be not sure where the price is going just now. And when we construct the levels, we see that mostly in the non-distant future, within 3-5 minutes, because this is the 1 minute time frame, we will have we have the quite a strong resistance zone. So, and the probability that the price will go up from here, from this zone, is much more than the probability of it will be, this trend ray will be punctured. Maybe punctured, but not will be break through, but not break down. So, but I'll tell it about a little bit later. So, and the main ideas of the construction, as I promised, of the construction of levels, any levels, horizontal or trend ones, is simple. Is the geometry of the fifth school grade. So what we have to construct the straight line, and the levels are the straight lines anyway. They're horizontal or they're angled anyway. They're straight lines. To construct straight line, we have to point 2 points. We have to find 2 points. Through these 2 points, we can make the straight line. And with trend lines, it's easier because the 2 points are obvious. We can find the minimum, for example, here, and the max, and the next minimum, we can see it. It's about here. So we can construct it like from here to here, 2 minimums. If we will scale it, what do we have? Yeah, we have the minimum here and the minimum here. And this level works. It was working like a support level, then it was breaking through, became the resistance level, breaking through, and just a central line of the price movement. It works until now even. But with the time, it's more obvious than this positioning of the second point will be more obvious, more interesting, and more helpful. So with the price movement, with the some kind of time movement, we can see this. We reposition our second point until it doesn't work, and so far by now. We have the breakthrough, the quite strong breakthrough. I suppose that some kind of news have came out. So that is why the price is dropping down, despite the fact that of the resistance point here quite strong. And by the way, the horizontal line here, what we have. Again, we should find 2 points, and I have found them before when we were here. The most points were here, one, and the second is quite here. But now, and by the way, the upper line has the 2 points again here and here, and by now the horizontal line should be moved. Why? Because we have the 2 more helpful points, like here one and there one. So the price has reflected from this level, from this price level, 1.235830. So it reflected, rebounded from this level twice, and that is quite good. That gives us the possibility and the idea that the third point will be somewhere in future, somewhere here too, and this is resistance level. This resistance level is quite strong. So the main idea of any level that except 2 points we can find, we have to find for constructing that truly right. So the more for horizontal even, the more points of reflection we have, the rebound of the price, the more points we have on or nearby this level, the stronger level is. So if we have, for example, we had this 1 point, and for example, quite here, another one. Here 1, 2, 3, 4 until here. So it was quite strong. The next time, the price has breakthrough, a couple of breakthrough, and the third time, it tried to make a breakdown, but well, it was not done. So this level is quite strong. And by the way, the main idea of levels that it's not just just a line. It's some kind of a zone. If you will put the level as it was here, we will see that the price, even for breakthroughs, not breakdowns, but breakthroughs, some kind of puncturing this line, it couldn't do it. The price couldn't do it quite well. It hasn't done the trend. The trend was small. It's still, the price is still in the flat, and we can see it here. So I can try to show you what I mean by the zone. So any kind of price level has its zone of resistance. It's not just a line. How can we see that? For example, we can take a channel here, tools. Oh no, we'll make the horizontals, but a little bit thinner and the different color. For example, blue ones, not blue, but green ones. Okay, what do we have? So we have the middle, the level, and from this level, after this point in the future, we have a little bit up point, the zone, and a little bit down. And all this zone between two thin lines is the resistance zone. And this resistance zone rebounds the price down once and once again. And until the price is here, it doesn't matter when we have the punctured, the main level, the median level punctured, it doesn't matter it's a breakdown. It doesn't mean that this is breakdown. It may be just a breakthrough. And the price until it is in this small zone, resistance zone so far, yeah, it will go down again. Even if we can see here, like it seems like a breakdown, the candlestick closed upper than the line, the next opened upper than the line, not inside not between these two blue levels, but the price went down, and it was not a breakdown, it just breakthrough. It reflected, and again the next time. So the price level, as we see, is a line, is not quite a line, it's quite a zone. It's a little bit up and a little bit down. Several pips are the resistance zone. It's not just a line. As the same thing is with the trend line. Why? Because we have, for example, when we have constructed it like here, we could do it the same thing with the ray, for example, the same ray, yeah. So we have a little bit upper parallel, well, quite parallel. I will try to draw it, and a little bit down, like here. And this is the middle line, and this is the between two thin levels, trend levels, the zone, the resistance zone. So while until the price is here with the sticks, candlesticks, with just a puncturing, with anything, but until the price is here, this level trend line is not it's not a breakdown, it's just a breakthrough, like here one, for example. It came the price came lower than the median level, but it is still inside in the resistance supporting zone, and only then from the first, second, third, fourth attempt the price went down and made a breakthrough, I suppose with some kind of news or help, with some kind of help. And now we are still in the flat zone. The same thing is with the support horizontal line. It is not just a line, it has some kind of it has some oh, wait a sec. It has some zone, a little bit lower and a little bit upper, and until the price is in this zone, the flat is not ended. So here is the same. The price reflected not from the line itself, but from the zone. It reflected, rebounded up from the zone, support zone. That is the main idea. So I'll try to make it quite understandable. Sorry for that. Yeah. Oops. It's quite not easy to show something on the screen. Trying to explain until I have not the possibility of the showing this screen to you, but I have tried to do the best. Well, hope it worked, but well, I'm not sure. I will see it after the stream. Anyway, I suppose that I will repeat this stream again, because the technical issues, well, it's my pain always. Okay, so the conclusion of the main ideas about horizontal levels and the trend levels. The main idea that the line is a trend line or is a horizontal line, the level support or resistance anyway, is not just a line. It's a zone where the price reflects or rebounds from this level. It doesn't mean that it will do always on the level. It will be a little bit rebound, for example, yeah, a little bit lower, a little bit higher from the median level when we construct it by 2 points. By the way, it doesn't matter how to construct the line, trend line or horizontal line by 2 points. So these 2 points may be on the lows or highs anyway, with the shadows of the candles by exactly the high, not the body of the candle, but high or low, the shadows, the shadow ends. You can construct it by the open and close price, so the body of the candlestick, price candlestick, or it may be even the middle of the candle. Anyway, it will work. if you remember that this is not just a line, it is the zone, support and resistance zone. It's not a line and just a thin channel. Anyway, always it's a thin channel, a little bit higher than the line we have and a little bit lower than the line we have. Well, as for me, I prefer to construct the trend lines with the angle lines by the highs and lows, by the ends of the shadows of the candlesticks. And I prefer to construct the horizontal lines with the body of the candlestick, with the open and closed price. Because the puncturing of any level, of any support or resistance zone mostly is done by the shadows. So make the construction of the level of the horizontal level by shadows. It's not quite it's not quite right for me. I prefer to work with the bodies, candlestick bodies, and the trend lines. Well, I prefer to use the ends, highs and lows, because until the highs and lows, not only open and closed price, are inside or on the level, we have the trend, and we may make deals, because the puncturing, breakthroughs and breakdowns are calculated by the close price. So if the closed price is lower than the support or higher than the resistance level, we can say that we have the breakthrough. If we have some kind of opening price higher than the resistance level, or even resistance zone or support zone lower than support zone, if we have such a possibility, such an idea, so that means that it has become the breakthrough has become the breakdown. So the price broke the level, the not only just the line but the corridor, a little bit kind of a zone around this line. The zone is broken, and the price goes up if it is the breakdown of the resistance line, or down if this is the breakdown of the support line or support zone. That is the main difference. So the breakthrough is just a test of the price, test of the buyers or sellers if they can buy or sell higher or lower than the corridor than it was the hour, during the hour, the day, or the month before, or no one will buy there by this price. If someone is ready to buy by this price, then the breakdown becomes true. If not, someone tries to sell, for example, higher than it is, the most part of the sellers and buyers, the flat, yeah. Someone tries to sell higher, and the crowd doesn't agree with that. No one wants to buy higher at this moment. But if someone wants, if someone tries to speculate, or someone tries to buy really because they know something about in the future, or they think that they know something, they have analyzed anything, some information, and they hope, they have expectations that the price will rise of the asset, the price of the asset will rise, then they are really ready to buy higher than now, but it will anyway be lower than in future. So if we have such a situation, if we have such buyers, then the resistance line will be breaking down. If not, it will be just a breakthrough and then rebound inside the flat channel. That is the main difference. That is the main idea. And rebound, by the way, rebound is just reflects of the price from the resistance and support zone inside the channel, what was during in the flat channel. Yeah, that was during some time before, an hour, a day, or a month, anyway. So how much time we had the flat? So inside this channel, this part of the price movement. So that is just a rebound, reflection of the price resistance and support zones inside the channel. The puncture or the breakthrough is just a test of these levels, of these price zones of resistance and support. It doesn't matter what we are talking about, horizontal ones or the channel of the trend channel, anyway. Yeah, the same. That is why we should understand where to, from this we understand when make deals inside, make deals for profit. So the rebound, anytime we are coming up to the resistance or support zone, if it is quite a strong levels, and we understand that strong level that has not only two points of construction but more, we have put it this level like by 2 points, but in time we have seen we found that the price reflected sometimes more from this level or zone around the level. So if this is the strong level, 3, 4, 5 rebounds before, then the possibility that it will rebound again from the level is much more. So by the coming the price up to this level of resistance or support, or zone resistance or support, we are waiting, and when the price rebounds, when the next candlestick opens with the rebounded from the level, then we can open the deal for 3, 5, even 10 minutes if we are talking about the resistance, the time frame as in 1 minute. And quite the opposite from the about the breakthroughs and breakdown. When we can see the breakthrough, we are waiting until we will see the symptoms of the breakdown. So when the candlestick opens far from this level and the resistance or support zone, and when it opens abroad this corridor, we can open the deal, understanding then the other trend has begun. About rebound, the same thing, we can open the rebounded price and the deal inside the trend channel, angle trend channel, if the price reflects from the resistance or support lines. It's not such a difficult thing, but it has to be practiced on demo account, a little bit on real account. So just make a small deals. First of all, you make on demo account any amounts, whatever you want, and so you practice. You just trying to understand how does everything works, how to create and construct the levels on this asset, permanent asset you are trading, not all the ones. With experience, you will understand, you will see it even without the lines by candlesticks only. But in the beginning, just don't forget to construct, to practice to construct them right. Then on the real account with the minimum amounts, you will try it to make profit. And then, only after that, you will be able to practice and trade with your own money management, with your real market money management and risk management. But anyway, trading from the channel, inside the channel, flat channel, with rebounds, inside the trend channel, with rebounds and breakdowns and breakthroughs, on that things you should practice before using. But you should do that because this is the basics. Without these basics, you won't understand a lot of things, and you won't be able to work with moving average, with any kind of Bollinger Bands, chaos channels, well, even the most part of oscillators, for example, like CCI channel, commodity channel index, and even with momentum, you won't be able to understand what do they mean and how do they work and how to trade with these indicators and tools until you don't understand how does it work with the line, with the trend lines and horizontal lines, support and resistance. Because the moving average, for example, is the same thing, just it's, well, adoptive. The same breakthroughs, the same breakdowns, the same also the same reflection rebounds. It all works in the indicators too. But the first, with what you should begin, is just practicing your trading on levels, support and resistance levels, horizontal and trend. Okay, so far for this moment, that's all I wanted to tell you for today. I will read comments now, and I suppose this stream will be on the channel for some time. Then I will delete it when I will make the better one version with no technical issues. And there will be another one about trend lines and trend level, the same information, but with more demonstration on the screen. So it's the next time. So okay, here are the questions as usual. Sound is okay? Yeah, I've seen that. Sir, can you show that how to construct the trend lines properly in UPC? We also see that and learn. Yeah, sure, I will. I'm really sorry about today's issues, well, and problems, technical problems. Sorry about that, but it was planned. This stream was planned, and I had to do that. Even if I have such an idea, such a problem. I want to learn rebound and how to know when a trend is coming to an end and what to do if you get caught up in it. If you get caught up, well, I will talk about that in the stream where I will I'll try to explain the Dow theory, because the Dow theory is the father and the mother, the everything, the Charles Dow, the everything for the technical analysis as we know it so far, as we know it for today. So he made the main conception of the trend lines, of the trend, of the price movement, and everything else we know now. So we use now, not even now. More than 5 points of support is not risky. More than 5 points of support. Well, for if you can see the signals, the obvious signals that the price will is rebounding, and you have that the support zone, not only level, yeah, as I told you, the support zone, if the price is inside this zone, so you can make the deal for rebound, but take a little bit more expiration time, because it can go down to the level or even break through it. For minute to 3 minutes it may take, and then it rebounds back. So it's risky anyway. Any deal is risky, but if you can see that the signals of the rebound are much more stronger than the possibility and signals for the breakdown or even breakthrough, then you may make a deal for the rebound of this from this level. Well, it depends on a lot of things, but if you have the I will say the practiced methods of the level and trend and horizontal level trading, you will see that with a little bit of experience. Just don't try to make it write down right now. For example, you have heard everything I told you, and so within 5 minutes you begin to trade on your real account. Don't do that. Just practice a little bit on demo, understand the some kind of patterns, level patterns, and the candlestick chart patterns too, because they can help you to understand what is going on near the level support or resistance, or the zones, resistance and support zone, because the candlestick analysis, for example, helps you to understand when the candles are drawing you near the level, the swing, some kind of a swing pattern, then the rebound is much more well, much less risky than without this pattern. Or if you can see the some kind of candlestick breakdown pattern, well, why not? So you should not then trade a rebound deal. Just wait the breakdown, or wait for even breakthrough, and after that you may make a deal. So the less risk is the more knowledge. The less risk is the more signals you can see on the chart. It lessens your risk. Well, okay, so it's 53 minutes past. I suppose that for today that is all I had and wanted to tell you about these levels, trading levels for today. And see you next time, I hope so, with new information, or with the, as for today's issues and technical problems, with the repeat of this material again, with more showing the screen. So far, till next time, and thank you for being with me today. Bye.